Welcome back to Rand on Real Estate. I'm Greg Rand. This is 77 WABC. The website is gregrand.com. And we're going to be joined now with Robert Weisz. He's the CEO and founder of the RPW Group, a highly successful and professional real estate investment group in the New York area. Robert, can you hear me?
I can hear you clearly, Greg.
Okay, wonderful. Thanks so much for joining us today. We're excited to speak with you.
Thanks for having us.
All right, so Robert, the conventional wisdom out there right now is that the housing market has crashed. We're all going to hell in a handbasket. The next shoe to drop is going to be the commercial bubble. So nobody but a crazy person would be buying real estate during the Great Recession, especially now when we know that commercial real estate's going to be falling off the cliff, according to the experts. So why are you?
Well, I think that you had put it in very clear terms. Things are bad. They will probably get a little worse. They may not, but they are certainly bad enough. So when do we rather buy? When prices are very high or when prices are very low? So this is a time to buy when prices are low. The key is to be able to hold on to the properties until prices come back up. And that's, in a nutshell, the reason why this is the time to buy.
Beautiful. So the topic of the show today is the real estate cycle. Understanding the real estate cycle, knowing that it starts off in one place, it's going to go up for a while. When it goes too far, it inevitably corrects. And then after that correction, there's a bottoming out. You've seen a couple of cycles. You've been around for a while. Did you? What were you thinking back like in 2001, 2002, all the way through maybe 2006 as the market was going really hot and heavy? What were your thoughts then?
Well, frankly, just to put things in context, I started my business in 1979. So since then, we had probably 4 major cycles. And I think the most important part of this economy to be understood is that we do have cycles.
Right.
And things go up and things go down, and that is going to happen sooner or later. So when the market was just getting very hot and prices were going up, the understanding on our part was that eventually prices will go down. So we were very careful when we looked at properties and we made acquisitions. And we certainly selected those properties that had an upside. So in spite of the fact that the market was at one point pretty pricey, we felt that the properties we were buying had still an upside. At the same time, we were selling some of the properties that were fully developed, taking advantage of the pricing at the market at the time in the market.
So you look for properties that, first of all, you're timing it right, but also you look for properties that have an upside. Can you describe that? Is that always a factor just simply of the market having some room to go up, or do you look for properties that are, maybe an ugly duckling that has some opportunity to improve in some way?
Well, I always say that we are in the lemonade business. We buy lemons and we turn them into lemonade.
That's great.
And frankly, we look for those ugly ducklings that eventually can turn out to be great properties. Sometimes they need a reposition from a marketing point of view, or can be a structural issue, or can be just some taking care of the landscaping, et cetera, et cetera. So that's what we have done over 30 years.
So the marketing point of view is interesting. You mentioned, a lot of people could relate to the idea that if a building or, the listeners of this show are people that are thinking about making their first investment in real estate. So it might be a condo, it might be a 2-family, it might be a single family. Chances are it's going to be a low price point as they enter the market. And people can relate to the idea of condition being where the upside is. You find a fixer-upper, you fix it up, and you've improved it in that regard. But you mentioned marketing and positioning. Can you share kind of an example of where you've done that successfully?
Well, one of the best examples that I can think of is the former Altria building, or General Foods.
Okay.
Which was a great building right from the get-go. And what was needed was a repositioning of the building as a full-service Class A office building. And we did not change the building structurally, but we did change how the building functioned. And we turned an empty building of 500,000 square feet into a fully leased building in 2 years.
So that was a building
strictly from a marketing point of view.
So that was a building that was basically a corporate campus before, right? So there was one tenant, or maybe they owned it, but it was one company occupied the entire. And how big of a building is that?
The building is approximately 500,000 square feet rentable.
Okay, so it was one tenant or one owner. When they vacated, it was empty, and it sat empty for some time until you had a vision of, instead of finding only one company that would come in and occupy the entire 500,000 square feet, you repositioned it, remarketed it, and offered it to tenants who would be taking smaller parts of the building. And what else did you do? You created a different atmosphere there?
Well, we created enough amenities that the building pretty much can take care of every possible need that anybody in the companies that are in the building could have, from a bank branch, we have a fitness center, we have a barber shop, a beauty parlor, a conference center, 2 restaurants. So we added a number of amenities that made it a very unique location. And that's, I believe, what made the difference, and that's why we leased the building so quickly. That's
a great story. You know, it's one of the things that I like to tell people is that real estate is the entrepreneur's playground, okay? It's a place where creativity is rewarded, where vision is rewarded, certainly these days where patience is rewarded. But your story about that building is great because it basically shows that, you know, even before you even put a coat of paint on the walls, you took a building that could not be rented out because it was positioned in one way, repositioned it, and now it's fully leased, and it's one of the marquee addresses in Westchester County right now. So that's a fantastic story. Question for you. Where do you see the market in 10 years?
Well, I can tell you that within the next 10 years, the market is going to be up substantially, and probably within the same 10 years, it's going to go back down. I find that the cycles usually last approximately 6 to 7 years. And from my point of view, we are very close to the bottom of the cycle. We are probably coming out of the bottom, but it's very hard to predict how long this is going to take. I believe personally that in the next 3 years we are going to see a dramatic turnaround, in spite of how negative things look today.
Well, that's wisdom from somebody who knows what he's talking about. I want to thank you from the bottom of my heart, Robert Weisz from the RPW Group. That was great information. Thank you so much for being with us. This is Rand on Real Estate. I'm your host, Greg Rand. Come see us on the website at gregrand.com and visit us next week at 77 WABC.